Assalamualaikum everyone and Sir Fadirul. Today we will presenting the financial analysis of Media Prima Berhad. Our group members consists of myself, Muhammad Uzair, Muhammad Fitri, Muhammad Exal, Muhammad Hafiz and Nur Ainul Balkis.
Media Prima Berhad is one of the leading media company in Malaysia. The group operates across the television, radio, print, digital media and advertising platform. Over the years, Media Prima has evolved from a traditional broadcasting company into a diversified media in group focusing on digital media, content creation and creative solution. This transformation shows the company's ability to adapt the technological changes in shifting customer behavior, strengthening its position into Malaysia media industry. For the core business activity, Media Prima operates several major free-air television such as TV3, 8TV, NTV7 and TV9, which also attract a large audience in nationwide. The group also manage a popular radio such as Hot FM and Fly FM. They also, through a News Straits Time Press, Media Prima also publish a leading newspaper like Berita Harian, Harian Metro and News Straits Time. For the industry profile, the Media Prima competes with a pay TV operates, global streaming services and digital content providers. Although advertising revenue is shifting towards the digital platform, it also remains the main income source for the industry. High internet users in Malaysia support the growth of the digital media, while the traditional media continue to remain relevant. For the economic and industry factors, Media Prima financial performance is influenced by the economic condition such as advertising spending, cost management and digital transformation. Economic slowdown may reduce advertising revenue, especially in traditional media. To address this, company has diversified into a non-advertising business such as a creative solution, home shopping and digital content. Efficient cost control and investment in technology and effective cash flow management are essential to ensure the long-term profitability.
In assessing the 2025 economic climate, we observe four distinct pressures affecting Malaysian media organisation. First, regarding macroeconomic volatility, the market is seeing moderate growth. However, the depreciation of the ringgit is significant because it forces clients to reduce advertising expenditure, which is primary revenue driver for firms like Media Prima. Second, we must consider inflationary distortions. Although inflation rates may appear subdued, they can artificially inflate nominal revenue figures while operational costs, such as wages and utilities, remain high. This requires a deeper analysis to understand the firm's true profitability. Third is the post-pandemic transition. The industry is currently in a structural pivot. Companies are aggressively reallocating assets from traditional broadcasting and print sectors into digital platforms to secure sustainable long-term earnings. Finally, the financial environment is tightening. With an elevated cost of capital, media firms face higher expenses when raising funds for tech upgrades. Consequently, maintaining optimal leverage ratios is essential to comply with bank regulations and ensure liquidity.
For the liquidity ratio, the current ratio of Media Prima for 2024 is 1.43, which is for every 1 ringgit of the current liabilities, the company had 1.43 ringgit of current asset to repay the current liability. For 2025, they got 1.34 ringgit, which is for every 1 ringgit of current liabilities, the company had 1.34 ringgit of current asset to repay the current liability. For the quick ratio, Media Prima got 1.35 ringgit in 2024, which is for every 1 ringgit in current debt, the company had 1.35 in quick asset. For the 2025, they got 1.32, which is for every 1 ringgit in current debt, the company had 1.32 in quick asset. Lastly, for the cash ratio, in 2024, they got 0.88, which is for every 1 ringgit current liabilities, the company had 0.88 ringgit of the cash and cash equivalent available to settle its short-term obligation. For 2025, they got 0.77, which is for every 1 ringgit of the current liabilities, the company had 0.77 of the cash and cash equivalent available to settle its short-term obligation.
Now, I will move on to the profitability ratios. Profitability ratios show how well Media Prima Berhad can make profit from its sale, asset and shareholder equity. First is the gross profit margin. This ratio shows how much profit the company earns after paying direct costs. In 2024, Media Prima Berhad recorded a gross profit margin of 69.2%. This indicates that the company managed its production and operating costs efficiently and was able to generate strong profit from its sale. In 2025, the gross profit margin declined to the 64.3%. This shows that higher costs reduce gross profitability, indicating weaker cost efficiency compared to the previous year. Next is the net profit margin. This ratio shows how much profit remains after all expenses. In 2024, the net profit margin was 7.2%, which reflect reasonable overall profitability and effective expense control. In 2025, the net profit margin fell significantly to the 2.4%. This indicates that the increased operating and other expenses greatly reduced the company net profits. Thirdly is return on asset or ROA. This ratio shows how efficiently assets are used to generate profit. In 2024, Media Prima Berhad recorded an ROA of 4.2%, showing that the company used its asset effectively to generate earnings. In 2025, ROA declined to 1.4%, indicating lower asset efficiency due to reduced profitability despite an increase in total assets. Finally is return on equity or ROE. This ratio shows return to the shareholders. In 2024, the ROE stood at 8.4%, indicating that shareholders received a reasonable return on their investment. In 2025, ROE dropped to the 2.8%, reflecting a significant decline in the shareholder return caused by weaker overall profitability.
In this section, I will explain the efficiency ratios of Media Prima Berhad for the years 2024 and 2025. Efficiency ratios measure how effectively a company utilizes its asset to generate revenue and manage its resources. Generally, higher efficiency ratios indicate better asset management and operational performance. Okay, first let's move to the inventory turnover. Inventory turnover measures how efficiently the company manages and sells its inventory. For 2024, Media Prima recorded an inventory turnover of 8.18 times, meaning the company sold and replaced its inventory about 8 times during the year. For 2025, the inventory turnover decreased to 7.53 times. This decline indicates that inventory was moving slower compared to 2024, which may suggest a weaker sales performance or higher inventory holding. Overall, Media Prima Berhad inventory management become less efficiency in 2025. Okay, next, fixed asset turnover shows how effectively the company used its property, plant and equipment to generate revenue. In 2024, the fixed asset turnover was 1.18 times. This means that every 1 ringgit invested in fixed asset generate 1 ringgit 88 cents in revenue in 2025. This ratio slightly declined to 1.84 times, indicating a small reduction in efficiency in utilizing fixed asset. Although the decline is minor, it suggests that Media Prima generate slightly less revenue from its fixed asset in 2025. Okay, next, total asset turnover. It is measure how efficiently the company use all its assets to generate sales. For 2034, the total asset turnover was 0.54 times, meaning every 1 ringgit of total asset generate 54 cents for revenue. In 2035, the ratio decreased marginally to 0.53 times. This shows that Media Prima overall asset utilization remained relatively stable, but with a slight decline in efficiency from 2024 and 2025. Okay, last part is receivable turnover. Receivable turnover indicates how efficiently the company collects payment from customer. In 2024, Media Prima recorded a receivable turnover of 5.20 times, showing that the company collected its receivable fairly efficiently. However, in 2025, the ratio declined to 4.66 times. This suggests that customer took a longer time to settle their payments, which may affect the company's cash flow. Okay, overall, in conclusion, most efficiency ratios of Media Prima Berhad declined slightly from 2024 and 2025. This indicates that the company experienced lower efficiency in managing inventory, assets, and receivables.
Moving on to leverage ratio. For debt ratio in 2024, for every 1 ringgit of total assets, Media Prima Berhad finances 50 cent with debt from creditors. In 2025, for every 1 assets of total assets, Media Prima Berhad finance 51 cent with debt from creditors. And to debt to equity ratio, in 2024, for every 1 ringgit of total equity, Media Prima Berhad uses 1 ringgit of debt to finance its assets. In 2025, for every 1 ringgit of total equity, Media Prima Berhad uses 1 ringgit and 2 cents of debt to finance its assets. Lastly, time interest earn ratio. In 2024, Media Prima Berhad's operating profit covers its interest expenses 5.25 times. In 2025, Media Prima's operating profit covers interest expenses 2.58 times.
In 2024, Media Prima Berhad recorded an EPS of RM5.45, reflecting strong profitability and effective management of its core business segment, including television, print, digital, and out-of-home advertising. The positive performance was supported by recovery in advertising revenue, disciplined operational control, and resources optimization, demonstrating the company's efficiency and resilience in competitive media environment. Now, in 2025, EPS dropped sharply to RM1.89 due to a lower net profit of RM21.015 million, while the number of shares remained unchanged. This decline indicates reduced profitability influenced by higher operating costs, weaker advertising demand, and broader economic uncertainties. This significant drop highlights the challenge Media Prima faced in maintaining earning momentum amid during the change of market condition.
Next, I will explain the trend of EPS for Media Prima Berhad for the past 2 years, which are 2023 and 2024. EPS is an important profit indicator. It shows how much profit is earned for each ordinary share held by the shareholders. For Media Prima Berhad, in annual reports, in 2023, the company recorded an EPS of RM5.83, while in 2024, the EPS decreased to RM5.45. This shows that EPS declined over the 2-year periods. Okay, this is the calculation of EPS growth. From the calculation, this means that EPS decreased by about 6.52% from 2023 to 2024. The decline in EPS indicates that Media Prima Berhad earned a lower profit for shareholders in 2024 compared to 2023. Since the number of shares remained unchanged, the decrease in EPS was mainly due to lower profitability, not change in the share capital. Although the decrease is not very large, it shows that the company faced challenge in maintaining earning growth in a competitive and changing media industry.
I will briefly discuss 4 key areas: liquidity, profitability, efficiency, and leverage ratio. First, let us look at the liquidity ratio, which measures the company's ability to meet its short-term obligation. The current ratio decreased from 1.43 in 2024 to 1.34 in 2025, although the ratio remains above 1, indicating that current assets are still sufficient to cover current liabilities. The decline suggests a slight deterioration in short-term financial strength. Similarly, the quick ratio fell from 1.40 to 1.33, showing a reduced ability to meet short-term liabilities without relying on inventory. The cash ratio also declined from 0.88 to 0.77, indicating that the company immediate liquidity position weakened with less cash available to cover urgent obligation. Next, moving on to profitability ratio. The gross profit margin dropped from 69.2% in 2024 to 64.3% in 2025, suggesting higher cost or reduced pricing efficiency. More significantly, the net profit margin fell sharply from 7.2% to 2.4%, indicating that rising operation expense and other costs greatly reduced overall profitability. This downward trend is further supported by decline in return on asset from 4.2% to 1.4% and return on equity from 8.4% to 2.8%, showing that the company was less effective in using its asset and shareholder equity to generate profit in 2025. Now, looking at efficiency ratio, the inventory turnover decreased from 8.18 to 7.53, indicating slower inventory movement and potential inefficiency in inventory management. Both fixed assets turnover and total asset turnover also declined slightly, suggesting stable but relatively weak asset utilization. Additionally, the receivable turnover fell from 5.2 to 4.66, meaning that the company took longer to collect payment, which may negatively affect cash flow. Finally, let us consider the leverage ratio. The debt ratio increased slightly from 50.1% to 50.5%, while the debt to equity ratio rose from 102% to 102%, indicating greater reliance on debt financing. Most concerning is the time interest earned ratio, which dropped significantly from 5.25 times to 2.58 times, showing that the company ability to cover interest expense weakened due to lower operating profits.
Moving on to the overall financial health of the company, Media Prima Berhad remains financially solvent, even several warning signs are evident. From a liquidity perspective, both the current and quick ratio remain above the benchmark level of 1 in 2024 and 2025, indicating that the company is still able to meet its short-term obligation. However, the slight decline in this ratio in 2025 suggests that current liabilities are increasing faster than liquid assets. In terms of operational efficiency, slower inventory turnover and longer receiver collection period indicate weaknesses in working capital management, which may increase costs and strain cash flow. From a leverage perspective, the company maintains a relatively balanced debt to equity structure, but the slight increase in debt level rise financial risk. This risk is further highlighted by the significant drop in the time interest earned ratio from 5.25 times in 2024 to 2.58 times in 2025, suggesting reduced ability to cover interest expenses from operating profits. Next, I will discuss the strategy recommendations to improve Media Prima Berhad financial performance in the coming year. Firstly, the company should focus on the cost restructuring and expense costs to address declining profitability. This includes reviewing production, administration, and operational costs while ensuring that content quality and brand value are maintained. Secondly, Media Prima Berhad should improve its working capital management by optimizing inventory levels, strengthening receivable collection, and enhance cash flow planning. Effective working capital management will reduce reliance on short-term borrowing and improve liquidity. Thirdly, the company should adopt a more continuous approach to debt management by refinancing high-interest borrowings, extending debt maturity, and maintains debt level that align with its earning capacity. Lastly, the company should invest in growth opportunities such as digital expansion, content diversification, and strategic partnership to support long-term profitability and increasing competitive media environments. In conclusion, the financial ratio analysis shows that Media Prima Berhad remains financially solvent, but its performance is decreased in 2025. Profitability declined significantly as seen in the lower net profit margin, return on asset, and return on equity. Efficiency issue and higher costs reduce the company's ability to generate sustainable profit. In addition, the shortfall in the interest coverage ratio indicates higher financial risk. But overall, while the company is still stable, strategic improvements are needed to strengthen profitability, efficiency, and long-term financial performance. So that's all from us. Thank you for your time.